So I think the byword for the day, and probably for many days going forward, is volatility. So we've had a Fed that I've been saying is behind the eight ball for a long time. They let the cat out of the bag in terms of inflation. Now they're going to play catch up. They're going to tighten, and I think that it's going to be difficult to land this plane without tremendous amounts of volatility. Now, a lot of people equate volatility negatively. I love it because it means that if you're right, you're going to get paid a lot, but if you're wrong, you're going to pay dearly also. So this is, we've got up, down, sideways. You can see the NASDAQ came down. Now we're, going right back up. S&P, the same thing, almost at the highs in November. So November, we're, had this jobs report came out badly. Now we're back up with good COVID news, and we're, retesting these old highs. And, whenever you kind of come back to old highs, there's always a consolidation, a lot of volatility. And that's what we're dealing with. And I think this is what I was saying yesterday, where everything opened up substantially higher. There was, just huge suppressed energy, meaning that, things have come down so far, so fast that, sometimes we just need a release. So this is, Roku, it's come down in a straight line. So we had a bit of a key reversal, and now you're getting a bit of the release of that energy. And so it's a question of, how high it goes before it starts really back down again. This is a downtrend, but things also go higher in downtrends. And so it becomes, when you see a day like yesterday where everything's up 4 or 5%, you just want to get on board that momentum. You want to chase it. You want to, and so these are very difficult periods where moves have already happened. I think these downtrends are not over. These stocks that have been in profound downtrends are still going to go lower, but they could, go higher, in the meantime. And so to my mind, it's all about, assessing the risk on any given trade. And when, something's come down as hard, even like Beyond Meat, this thing is going to go lower. I believe this will be a $40, $50 stock at some point. But it could also be, a $77 and an $80 stock before it does that. So you can see that these markets, as they come down, but they come down in a, sometimes in a cadence. This has been just like a stair step lower, where it makes a low, goes higher, makes a no low, goes higher. So we get these little sequences, and, before it runs out again. And so the thing is, you kind of got to keep your eye on the ball. Just because the market is up huge one day, now you think everything's changed and you want to turn around, and, to some degree, there will be these enormous counter trend things, and I will jump on these plays. But, I think what I'm trying to say, it's very difficult to keep your head on straight. It's like a swirl. Every day is like, you see something going up and then it comes down, and then, you're in this. I have to monitor, myself in these kind of things where, the most difficult thing is just to kind of objectively assess something. And it's all about risk and reward. And when, we're kind of like, what I always kind of say is, we're in the middle of the tennis court. And for those of you who don't play tennis, at tennis, you either want to be back at the baseline or you want to be at the net. If you're in the middle, that's when you're going to get in a lot of trouble. And that's where these markets put you, right in the middle, where there's just a huge swirl of volatility. And now you're trying to predict where things are going to go. And probably the best, metaphor for that is Tesla, where I saw good risk reward. And now you're in the open field where, things could go anywhere. And the whole idea about trading is, to kind of assess where you can put on, something with a good risk reward profile. And sometimes it's just harder to gauge your risk. So this is Tesla. I do believe that we put in a top. this triple top with the word top means that this thing will eventually go lower. But it could also, go to 1120 before it comes down. And then, maybe you do this. When you go up so fast, you've got to build some space away before it falls. And I made a key error. I got in really well right up here at 1150, right on the turn. So I had a very small risk when I, in my mind, put on that trade. And this is a trade that I kind of want to just in my mind let work for me. I think that this thing will go lower, but it was a key error not getting out, in this support area. And especially when you get a key reversal, market closes on the, on the high when you're short, this is not something you want to see. So now the question is, I still think this thing goes down, but how do you get on board this trade? Where do you go? So sometimes we just need to let the market do a little bit more work so that we can see where those areas are of, these key levels of resistance. So now we have what's called an open bar where we close on the high, and yeah, it could go lower, but it could also go higher. And so, I'm a little bit nervous. I let this thing kind of go too far against me. I gave back an enormous amount of profits, but I still think that I'm going to be correct here.
You can see, 45 is 1.3 million.
$1.3 million short.
So popped out a profit for 118,000 there.
So you can see how this is going crazy now. You can see how the market just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.